Hey guys, I hope you are doing well and welcome to this video. So guys, we are going to analyze actually the 2nd of July, which was probably the last day of trading. And why we are saying so, because on Friday we had bank holiday, so it was the wisest thing if you didn't enter any position. So on the 2nd of July, we had multiple nice trading opportunities, to be honest. But before we analyze this day, we want to talk about the 1st of July, the Wednesday. So we can see a great spike and price went up, but it reacted to some levels that we had like from some days ago, and from that point it just shifted. Okay, so from this level it shifted. Uh, and we can see that the price come down and makes basically a like a high and low, and then lower low, lower high, and then this is the last swing. I mean, this is like our lower high, which creates the lower low. And from this point on, we don't have any more lower lows or lower highs. Okay. And if we want to basically draw a box, as you can see, what is this? This is exactly a trading range. So the price basically traps in a trading range. And a lot of traders, of course, like anyone that is dealing with Dow Jones, they know that London time is not its trading time, so they don't trade. And so this is we are in London time. And what I want to say is that uh, if the market's cycle or the market structure, if it wants to change, what do we need? We need to basically break one of these. And as you can see with this candle, we are breaking the lower high. And let me like make it like a zone here for you. So when it breaks, and this is the London time, can we enter the position? No. Why not? Because we are not sure if the buyers can maintain basically their strength above this level. Again, why it is not probable? Because the New York session hasn't opened yet, and there is not much liquidity. There are not much trading orders. And these are the things that basically push the price up and down. So if there is no liquidity and not much or not many orders, then setups can fail. Okay, so what do we need to do? We need to see the signs if they can do that or not, if they can maintain the price or not. So we will wait. And as you can see, we see like a candles that they are pulling back to this zone or to this level slowly, and they are showing not much strength. So the smallest they are, the better for us, for the buyers. And at the same time, we see that here the buyers or the bulls are stepping in. How we understand that? We see like two big, I mean by big, I mean relatively to this scale, they are decent. They are decent enough pin bars. And you can see one sits after the other. And when this is the New York sessions when it gets open. So we know that a lot of or some sellers, they entered this position in order to do what? Basically to gain or to take back this level. So where do their stops are? Probably above this level. Okay, so as you can see, there are some stops here, some stop of the sellers because they entered, for example, sell limits. So we have technically their stops here, and they after they've been hit, they will become what? They will become buy orders. So when the liquidity gets added to the market, and when the stops get hit, okay, the market goes up. So one of the trading positions for you here is exactly after the stops getting activated. So you can get how many TPs you can get. I mean, if because this is the part that our downtrend basically started. So you can see you can get I don't know, maybe until the third or fourth TP. Okay, uh, but it is up to you, and you must be consistent with your TPs. Okay, so the price goes up, and here we had another uh, swing. Am I right? And the price reaches that. Again, the same idea. It breaks it. But again, the question is that whether the buyers can hold the price or not. And again, what do we need? We need pullbacks. So we see the pullbacks, and again, the same thing. Some sellers entered the position, their stops are here. So we need to look for, again, signs of bulls that they are stepping in. So again, the same thing happens, and pretty much you can have another TP until here. So uh, it may seem easy, and I agree with you guys, but it is not certainly hard or difficult, even if you are doing it live. You just know to have some principles and ideas, and then you just go with it. It doesn't matter if it fails or you gain profit. You just have to execute the plan. Okay. uh, Many of you may say that, okay, maybe the market um, could have reacted to the break even and then fell down. I agree with you. That could have happened. But it is not your job to predict it beforehand. You should see the price behavior and read the price action. It is simply as that. So I will enter the position here, but I will monitor that if this break even can hinder or can prevent the price from going higher or not. Okay, so that is why I initially will put it here until I see some signs. So so these were the two setups, or more than the setups, guys, because not all of them are in this form. I mean, they can change a bit, but I think you got the idea. Okay. And so we went with like we followed the trend, and so they were in line with our uptrend, and I try to explain them. There is a reversal also setup or entry here, which I did actually, and but I think in order for our videos to be consistent, it is good that you learn one at a time. Okay, so just rewatch the video and learn the concepts that I uh, taught here for you. And if you are interested on coaching or mentorship one-on-one, you can just go to superproof.com, and you can search a stock market category, and under which you can see lots of profiles, but you need to find me. And when you did, you can send me a text, or you can book your first class. So I hope you enjoyed this video. Until next time.